right, so now it is time to jump into our conversation today about these innovative funding solutions. And we've got three amazing experts to guide us through our conversation. First, I'm excited to introduce John Bay. John joined PayPal to become the director for global merchant lending 2 years ago after being an executive with Bank of America. With nearly 20 years of financial services experience focused on small businesses, providing innovative solutions across all financial products, think deposits, credit cards, lines of credit, all of that. He strives to help small businesses achieve their goals. Hi, John. Next, we have Dr. Penny Mickey. Penny is the owner and operator of the Memphis-based gourmet popcorn business, Mickey's Popcorn. Penny worked with her husband to create a business that blends the nonprofit with the for-profit world. On top of amazing flavors like Oreo and Kentucky Bourbon caramel, Penny has firsthand experience of preparing her business for not only the holiday season, but so many different funding solutions. Hi, Penny.
Hello, Brittany. Thank you for having me.
So great to have you. And last but certainly not least, we have Chad Patterson. Chad is a business executive and strategic visionary with over 15 years of experience in finance, sales, and marketing. Chad has successfully founded three ventures and is passionate about helping small business owners and entrepreneurs scale their ventures. Hi, Chad.
Hello, Brittany. Hello, everyone out there as well.
Wonderful. And Chad, I'm going to kick it off with you. What are some examples of innovative funding options for our small business owners?
Yeah, so I think that's a great question. So I think before I'll dive into that, I think let's just kind of break down the difference between like traditional versus non-traditional. I'm sure some of you folks already are aware of this, but when you think about traditional funding, banks, right, where John worked at Capital One, credit unions, or any like government backed programs, right? Like SBA is kind of considered that more traditional approach. When you're thinking about non-traditional, and I think that has grown over the last probably 10 years or so, but online lending, right? So a lot of like fintech companies, right? Venture capital, right? Angel investors. So there's a lot of those different syndicates, crowdfunding platforms. I mean, I think you all know Kickstarter, I think GoFundMe, like those are really big platforms that folks are using to raise capital. CDFI, so that's like community development financial institutions. They're actually incentivized to lend to like folks within the community. So always be cognizant of that, because I think you can leverage that and build relationships with some of those folks within your community. And then like peer-to-peer lending, right? There's kind of a variety of different platforms that enable that as well. So those are just the difference between like traditional versus non-traditional. Now, like when we think about kind of these particular platforms, right? Let's say the crowdfunding platform, Kickstarter, Indigo, like that's really there to allow entrepreneurs to raise capital directly from like any potential customers or supporters. Then when you're thinking about like revenue-based financing, that's kind of where investors are able to provide capital in exchange for like a percentage of your business, right? Or there's companies like Clearbank or like Path. They kind of really specialize in this particular model. And then there's like the peer-to-peer, like that lending platform. So that's also kind of, as I alluded to, emerged as a game changer, really, right? So there's websites like Prosper or Lending Club really connects businesses directly with individual investors, and oftentimes more competitive kind of rates too, and less kind of attachment on top of that. And then angel investors like networks or micro venture capital syndicates. Those are also some elements to always kind of be cognizant of. Those are traditionally for like tech companies, like big healthcare, tech, fintech companies. They're kind of really big on venture capitalists having the right central infrastructure to support their business and things of that sort. So hopefully, Brittany, that answered your question.
Yeah, absolutely. I think what this really highlights is there are so many options, and kind of like you said, Chad, like this landscape has really expanded over the last 10 years. So there are more and more options for entrepreneurs today. With all of these new things, Chad, I was wondering, what are some common misconceptions that small business owners have about these alternative funding methods, and like how can they avoid those?
Yeah,
Yeah.
I think the miss could. That's for John, correct? Or did you say
Oh,
Chad?
yes, I'm so sorry. Go ahead, John. I'm sorry.
That's okay. I was starting to talk and anyway. That's Brittany. So I'd say one of the common misconceptions that small businesses have about their financial readiness is the idea that they need to have a robust background of prior credit history established through traditional institutions. And we know that isn't always the case, especially for more emerging businesses just starting out, or those that are trying to make a side hustle turn into more of a main source of their income. Some alternative lenders are able to look at other indicators or trends that help understand their financial capacity and to help make business understand those businesses to help make the lending decisions beyond necessarily just your traditional credit bureaus and financial statements. And that can be very critical for businesses in a growth stage. I'd also say there's still the mentality that I've seen that how a business loan is obtained. People kind of think I've seen it before where they've got to go into they almost think of it like a mortgage. They've got to go into maybe a branch, bring with them a big portfolio of financial statements, kind of proving how their business is operating, and sit across from the desk, if you will, and go through that with them, negotiate with the financial services person, and kind of just like hoping they've provided enough information that they'll hopefully get approved. Well, that's not certainly is not the case in a lot of the alternative lending space. An example would be for PayPal. We have one product, our working capital product. It is a fully automated application and decisioning process. You would not have to talk to a representative at all. You could if you wanted to, but in terms of the need to actually engage with a person, it is very streamlined. So super easy. Small business owners have very limited time, so it was really built and designed for that. But I do want to reiterate that even though alternative lending, just like that have been highlighted here, that even though there's additional sources of information and means to get to an approval, it's still critical for your business that you have basically the core items, which is positive cash flow, an established revenue source. Even for a startup, you still need to show, you've got some established revenue streams. And of course, good credit, whether that's your personal or business or both, and around your payment processing performance, right? So how you're collecting that revenue, that helps establish a trend and information that different lenders can leverage in making a decision.
John, that's such a good point that even though these alternate funding solutions might look a little different, there are some key elements that you still want to make sure you have access and awareness of and are able to leverage those when you are looking for funding. Penny, as a business owner who has successfully secured various types of funding for your business, can you share your journey and what made you pursue maybe some non-traditional funding options?
Absolutely, Brittany. So for us, it really all started with our origination story. So we started in the kitchen of our church. We were making popcorn, and our goal was really to help support underestimated populations, specifically domestic violence survivors, to be able to get some transitional employment that was paid, and then be able to get family sustaining wage employment in the food manufacturing sector in West Tennessee. So that was like the original plan. So we built it as a social enterprise with a for-profit arm and a nonprofit arm. And building it that way, again, we started in the kitchen of our church. We were able to fundraise from corporate philanthropy, government agency grants, and some other nonprofit organization grants. We evolved as our business evolved. So initially we were selling our product locally. So we're a consumer packaged good that initially started locally. But when we started to get orders and requests online and to ship across state lines, and then we had a large deal that we inked with a major distillery. for our trademark flavor, Tennessee whiskey caramel popcorn. And we knew that if we were going to sell to this distillery, that we couldn't just keep making popcorn out of the church's kitchen. So at that point, we started to look at, we needed a facility because we had to become a licensed food manufacturer. So we were thinking, okay, your facility cost is going to be probably your biggest expense in your business. That's going to be your biggest overhead. We didn't think that we would be in a position to purchase a commercial facility, but we looked anyway because we figured purchase versus rent probably are going to be around the same amount. And for us, that turned into us being able to find a commercial property, and the alternative financing opportunity there was that it was an owner financed property. So the owner loved our story, owned the building outright. And so we were able to avoid having to go through either some sort of SBA loan or some other traditional banking commercial real estate loan that way. I will tell you that if you go that route, be prepared that owner financed commercial deals, they're going to want 20% or more upfront because it is risky because they're really kind of like I'm from Kentucky, so I apologize for the Derby references, but they're betting on the jockey. And how can you drive that horse to be a winner? Is what they're betting on. So they're going to want to make sure that you're financially able to provide that 20% upfront. For us, we were able to negotiate a 12-year deal to where it balloons in 12 years. Most commercial real estate deals balloon between 5 and 10 years, which means you have to pay it in full in that amount of time. But what it did is it bought us an elongated period of time so that when that 12 years ends, we're looking to and we'll probably do it beforehand, but we'll just refinance the loan with a traditional bank. But at that point in time, the mortgage will be a much lower mortgage that we're refinancing than when we walked into the deal initially. So that's how we ended up alternatively figuring out how to land a commercial real estate deal that was really the key to unlocking our business, because without it, we wouldn't have been able to continue to producing as a licensed food manufacturer in the state of Tennessee. So for us, that's how we unlock the facility component to our business.
I love that you brought up even another different alternative funding solution, which is when you're looking into potentially getting property. And you said something that was so key was that I looked anyway. You really explored all of your options anyway and didn't take yourself out. I do see some really great questions in the chat. Please continue to drop those there. Some of the questions might be covered in our conversation, but we will have that Q&A at the end. Okay, Chad, what strategies should entrepreneurs use to determine what funding options like crowdfunding or revenue-based financing is right for them?
Yeah, so I think taking a step back, it's kind of like Dr. Penny, what she was saying. She just kind of looked at the different scenarios and options and said, okay, this is probably going to be the best option. I think so. Really conducting a self-assessment of your business, like your current stage, for instance, like your financial health, any like growth objectives. I think, and that's like not just any immediate cash flow needs, right? I think some people think about, all right, what do I look like right now? I need cash now. I think you got to think about the future, right? So long-term strategic goals. And are you looking to scale quickly, right? Or kind of like Dr. Penny, she had a more elongated kind of plan and said, we're not really looking to grow instantaneously over the next 2-3 years. We have some time, right? So that gave her the idea and concepts that she needed to leverage. But I think another part to consider is like, are you developing a new product, right? Are you entering a new market? So that assessment kind of gives you a foundation of understanding. I think next is just evaluate like the true cost of each funding option, right? So if you look at traditional loans, there's the interest rate that you have to pay back, right? If you're looking at equity financing, there's a percentage of ownership that you have to, be cognizant of diluting. For like a revenue-based financing, it's a percentage of, any monthly revenues, right? So each option essentially is going to have some sort of nuanced variable, right? In terms of like the financial flexibility. So those are things to consider. I think the other thing that, it was a big proponent we learned in business school is like completing a funding matrix. So really it's listing each potential source across like a top side. right? And then on your business kind of key requirements down the side, right? So it really gives you an opportunity to like rate each option against its criteria. So speed of funding, amount of capital that's going to be available, the flexibility of the repayment terms, any impact of ownership, right? That dilution portion, or like any additional value beyond like the capital, right? Like, so you look at venture capitalists, they usually provide mentorship or network, right? Access to different individuals. That's social capital that's also advantageous as well. So I say that to say, I think kind of starting with the general assessment and then figuring out like where you are within that funding matrix, and then identifying like what your threshold and appetite would be for any particular funding direction.
Yeah, I like the idea of the matrix and really looking at that and kind of going deeper than, okay, I need cash now, but like longevity wise, are the repayment terms good for me and my business and my growth? And just having all of those questions at the top of mind. Penny, how did you decide specifically for you what funding option, like crowdfunding or grants, was the best fit for your business at each stage of your growth?
Yes. So, we've pursued, multiple types of obviously grants on the for-profit side and the nonprofit side. And I do want to double back quickly to say that on that owner financed commercial real estate deal, do your due diligence. Make sure that there's no liens against that property. Make sure you have an attorney involved. Like it's a very serious step to take. So definitely do your due diligence. But I would say for us, initially, we were kind of going after every grant, every pitch competition, and it will exhaust you as a business owner because you're still running your business. You're doing all the things, multiple hats in your business, and you're writing these grants and you're being a part of these pitch competitions. So we had to evolve to where if it was a grant funded initiative that, let's say, it came with a commitment of attending some sort of like learning program. For us, what we learned really quickly was that we couldn't just participate in those for free. So there are several that have like no cash involved. It's you get the free workshops or you get free mentoring. All fine and good. If your startup, no revenue, I'd say go for it. But once we got to the place to where we have a production schedule. So we have to be very careful about when we're away from our business. Any program that required learning time commitments of 3 to 6 months, if it wasn't at least a $5,000 investment for our business, it was a no-go. If it was 6 months or more in a learning program, if it's not at least a $10,000 investment in our business, we decided we just couldn't do it. It just didn't make sense. The other things when it came down to grants and then like the application process, because that is it's a time commitment to apply. And so we evolved to where we had some really solid templates, understanding that each one's going to have its own focus and emphasis. But if we had to basically rewrite a whole new proposal for that particular opportunity, we determined that it just probably wasn't a good fit because our story is our story, our goals and our strategy is our strategy. And so if it required, multiple videos, revamping an entire proposal, we kind of avoided them. The other thing I'll say with pitch competitions, because with pitch competitions, now you're talking about some of them, you're going to travel to pitch, and that's going to be on your dime. So for us, we started to really try to understand who's the sponsor of the pitch competition, who are the judges of the pitch competition. So if there are, if this is a competition that, supposedly is industry neutral, but all of the judges are from tech, we're not applying to that pitch competition because they want to fund a tech product, which is great, but we're CPG. So we're looking for trying to hone in on specific pitch competitions, grant, and other alternative funding sources that is a good fit for our business. So we had to evolve to get there because at first you're hungry to be noticed and to get the free supports or even the cash. And so you go for it, but we had to evolve to really protect our time and our effort.
Yes, I really love the emphasis on protecting and really valuing your time. And I'm going to drop a resource in the chat for those who are interested in kind of diving deeper into developing like a really quality template. Like Penny was talking about, what are the elements that should go into a really quality loan or grant application, talking like traditional more funding, and then the grants. I've dropped a link there, so you guys can check that out. Okay, John, in your role leading strategy, what key trends are you seeing when it comes to alternative funding? And what practical steps can small businesses take to make the most of these opportunities?
Yeah, thanks, Brittany. I'd say one of the biggest trends that I've seen in the small business lending space is that there are more and more institutions and aggregator sites that are looking to provide funding alternative sources for small businesses. So really, there's been a fairly broad expansion of more players in the market, which obviously provides that much more opportunity. I'd say that that's just been from my experience and understanding those companies that are getting into that, they truly are more fully recognizing the entrepreneurial spirit, particularly post pandemic. And that there's a need to be able to support both the emerging businesses as well as the established businesses, because of course a lot of businesses were disrupted during the pandemic. So that's a lot of the expansion is trying to figure out a new way to support those emerging businesses in our communities. This should be great news for our small business owners. It is the lifeblood of the American economy, particularly, but even worldwide, of course. So it should be very good news for everybody. Because it's classically one of the top challenges for small business owners is having the ability to get capital to fuel their next opportunity, and to support their cash flow gaps, particularly with the more traditional financing. In terms of, I'd say a critical thing for a small business owner that they can do is to make sure you research all your options for lending and finding the right product or products that work best for you. Understand, obviously, time is very limited, but this is a critical step to make sure that you understand it from both a financial perspective in terms of the cost, time frame, et cetera, but also the product features and the value proposition. Make sure that it makes sense for you. You really need to take that time to understand the terms, the conditions, repayment frequencies, cost to pay that debt down. And making sure you find that right partner. Just to make sure as you're signing up for this, it aligns with your business needs, your cash flow, and really what's going to be key to make your business successful.
Absolutely. I think you hit the nail on the head in that, there are more and more businesses that are pouring into the small business economy, and that provides you a lot of options, and you want to be prepared to evaluate those options to work best for your business. I love that. Okay, Penny, what challenges did you face when you were applying for different type of funding? Because we know there's challenges in every stage. And so how did you overcome those?
Well, once we got past, top 3 expenses for CPG, at least for us: facility, equipment, and materials for purchase orders, right? So that's your top 3 lines. And you notice I didn't say workforce because we haven't paid ourselves yet. So workforce and payroll is coming, but just know that it's really tough to pay yourself when you've got other bills. So that's just a reality of startup and a new company. But for us, we got past the facility with the owner finance commercial real estate deal. We already had some equipment, so we didn't have to buy everything new. But we were prepared for the equipment piece. The good news is that for gourmet popcorn, the equipment wasn't too awfully expensive. It wasn't like, 6-figure type level for some other types of products if you were going to produce. So materials for the purchase orders. We got to the point to where when you're producing that purchase order, you've got to upfront all of those materials and then typically wait 30 to 45 days before that purchase order is paid out via the invoice. And so we were looking for an alternative way for us not to have to deplete our own cash on hand while we waited to be paid. And so for us, we looked at two options. We looked at line of credit from a CDFI and factoring. We landed on the line of credit, and here's why. So with factoring, again, not a bad option. So factoring is where a third party will basically purchase your accounts receivable. So if you've got a purchase order, you're producing it, that's an accounts receivable, right? That's cash that's going to be coming back to your business. So a factoring entity will give you the cash up front, typically 80 to 90% of that purchase order. So if it's a $10,000 purchase order, they'll give you $8,000 to $9,000 up front. And when your customer pays the invoice, they're paying the factoring company. So they've taken their cut off the front and kind of given you the rest. But the problem in CPG is it doesn't just stop at the percentage for the factoring company, because we've got brokers involved. We may have distributors involved. So that's another 5 to 10%. So if we would have gone the factoring route, we would have been looking at probably keeping 65 to 70% of an invoice value. And for us, it was cutting too deep in our profit margin. So obviously knowing your numbers and how much you're going to make off of a purchase order is key, because you may think that factoring in that scenario is the best option. But once you start to look at everybody who's got to get a cut, it was a bad idea for us. So we were successful in getting a line of credit from Pathway Lending, which is a CDFI institution here in the Southeast. And so that allowed us to unlock our ability to take on larger orders, and specifically in the grocery channel. So e-com was easy because that's folks ordering, less than 10 cases on an order. But with grocery, that's a single order of thousands of units. And so that's why those material costs look totally different for that channel. So you have to know your business channels that you're selling into, which channels are going to squeeze you financially up front while you wait to get paid, and then find what that alternative solution is. And CDFI is a community development financial institution. So they're a little bit different than a traditional bank. They have the ability to take on riskier investments, which riskier means you're new and you're probably too new or pre-revenue to prove that you can, you're going to be able to sustain that debt. So that's what a CDFI is. But we went the line of credit route with the CDFI. And, for us, kind of good news, bad news is like, that was great. So now we're in grocery. We were approached by a major food service channel to go into airport retail. And when they told us the volume and that our popcorn would have to go to 30 different warehouses across the country, we're now sitting on that contract and can't even move forward with it because we've got the line of credit, but it wasn't that big of a line of credit. So I wanted to put that out there, as a moment of vulnerability, that yes, as soon as you solve one financial issue, great, you've grown. And once you keep growing, you're going to have another financial hurdle. So right now we're looking at how can we fulfill 30 warehouses to the tune of multiple pallets per warehouse, multiple truckloads of product with this deal. So we can't even unlock the profit from that deal because the truckloads of product in and of itself would exceed the line of credit that we already have in terms of what we would need to finance those materials up front. But we'll hopefully the next time we talk, Brittany, I'll let you know that I have found a solution.
Yes, I hope so.
That level of an order.
Yes, and then we'll do another webinar about overcoming
Yes.
challenges of scaling and growing. Thank you so much, Penny, also for your vulnerability, because I do think, sometimes when we're starting, it can seem like everything is so out of touch or out of reach for us, but it truly is just coming over one small challenge after the other and not giving up. So I think that was also really helpful to hear about, you know, you want to be prepared, you want to have funding that is going to work for you. And also you don't want to overextend yourself. That factoring point was such a really great point. Like multiple people have to get their cut. So, you know, 10% doesn't sound so bad until you're looking at it's actually 25. And I want to do a little plug here for our free coaching at AOF. So if you have a question and you're like, you know, Penny mentioned, I think Chad mentioned, and John, that you need to know your numbers. You need to know where you're at. If you're feeling like I really need more one-on-one support, we do have free coaching sessions here. They're amazing business coaches on all kinds of topics, but also accessing capital is one of them. I just dropped the link in there. You can schedule one and you can get that 30 minutes, you know, one-on-one with someone who can really deep dive into your business. So if you have a question and we don't get to it today, I just want you guys to know there's alternate resources. Okay, so Chad, when you are helping entrepreneurs grow their businesses, I know you do that a lot. How do you ensure that the alternate funding strategies support that long-term growth rather than just that quick, immediate cash flow?
Yeah, so first, Dr. Penny, your story is, I think it's like really inspirational. You know, I think there's an element for you to kind of leverage that even more. So that's just a side note. But yeah, I think to back to your question, Brittany, you know, I kind of always counsel entrepreneurs to seek funding sources that really offer more than just money. You know, I think, you know, when you're looking at capital, you want to look for partners who provide mentorship, industry like connections, or even like strategic guidance, right? Because the capital part is important, but sometimes it's like, what do I do when I get it, and like, how do I leverage it, right? And I think that's where those particular individuals can come in and be really supportive. I think the other part is I really advise clients to conduct like scenario planning. You know, that's really important. So basically, just model how different funding approaches might subsequently impact your business, right? 3 to 5, 10 years down the line, right? So a funding source that provides quick cash but creates restrictive long-term obligations that can ultimately just hinder, right, the business growth. So I think prioritizing funding options that incentivize sustainable growth, like revenue-based financing, for instance, naturally aligns with investors' interests with like business performance, right? Like, so if your business is doing well, like you can have more capital deployed, right? So the more successful your business is, the better the return is for both parties. So I think really just kind of knowing how that capital will essentially multiply. Like I always tell clients, you know, a lot of folks come and say like, I want to have capital, and I'm like, all right, what are you going to do with it? I'm like, oh, we're going to do it in marketing. I'm like, all right, what does that mean? Right? Like marketing, that's like nefarious. And it's like, oh, I want to do ads. So like, but you have no return on that investment, right? Like, yeah, I'm sure you can create the best ads ever, but there's no real return on that particular investment. You're kind of hoping and wishing like that will convert into some sort of opportunity. And then you have to now take that opportunity and convert that into an actual sale. So I think at the end of the day, just really knowing the numbers is super important. My wife and I, we have an Etsy site, and like we're looking at stuff now. We're like, how do we even like make this like sustainable? We're not making any money. We're paying Etsy all the money, and then paying like our print on demand person all the money, and it's like, all right, this is not necessarily adding up, right? So I think just really having a fundamental understanding of your numbers and how you can take 2 and multiply that for 4, like that's really important. So that would be my kind of insight of what I advise some of my clients.
Yeah, I think that is such a good point, especially when you brought up the marketing, and when some business owners will ask for money, it needs to be very specific and having an idea of like, how do I get that back? And I know we just got a question about crowdfunding, but I feel like that kind of stands for your audience. Like your audience wants to hear, no matter how you're getting these alternative funding solutions, what you're going to do with it and how it's going to help you grow because they're supporting you. So I think that was great. Thank you so much, Chad. Okay, John, what are some practical ways small businesses can strengthen their financial credibility and make themselves more appealing to lenders or investors, especially when we're considering these alternative funding solutions?
Yeah, I would say that the biggest thing is really to start establishing credit in the name of the business. It's really never too soon to try and get something for your business entity, even if it's a small, credit card or something like that. It's to establish that trended information, because both alternative lenders and traditional lenders can and do look at personal, but also business bureaus. So if you think about it on your consumer side, right, the sooner you can start establishing good credit behaviors, then that sets up a trend that obviously gives your FICO score some credibility. Same thing on the business side. So really, just it provides more insight for all types of lenders, really. In terms of for positioning for investors, I'd say that the biggest thing that I would say is really make sure not to overextend yourself. And I know that's tough, particularly for startups. But really trying to make sure you have sufficient cash flow and some cash reserves, really to help make sure that you can handle those short-term cash crunches. It's obviously tough for investors, alternative or traditional, to see that you don't have any cash. It just makes it very, very challenging to make an approved decision. So, really just making sure you do have some of that for those hiccups in the night for the cash crunches. And then I'd also say make sure to utilize the appropriate lending borrowing solution. Dr. Penny already talked about factoring. While it has some pros, it certainly has some cons. So really just trying to understand whether it's your short-term everyday cash needs, such as a business credit card, a merchant cash advance, or a line of credit that was mentioned earlier, to maybe a longer term investment, such as fixed pay, term loan products. Really just trying to understand aligning your needs from a financing to the products to really best service those needs.
Absolutely. I think that's really, really helpful, especially again, I feel like the common theme is really being able to evaluate what options you have and understand what's best for you. Penny, so how did storytelling play a role in your journey to secure non-traditional funding? I know you mentioned earlier, like our story is our story. So what advice would you give to others about that?
Yeah, so I think for us, we had a clear identity from the beginning. We knew we were social enterprise. We knew we had an element that was all about giving back to the community and giving back to specific populations. And so that has carried over into sales, actually. We are partnered with a global brand. I can't say it because it's under a licensing contract, but it's a global brand that owns a portfolio of really large alcohol spirit brands. And they heard about us. They knew that we made Kentucky bourbon caramel popcorn, and they wanted to partner with us. They purchase our popcorn. So when they sponsor events where there's unlimited or all you can drink activities, so they have a drink responsibility unit. They really don't want folks to like overconsume alcohol at these events. And so they decided to offset the alcohol consumption with food. And with that food, they thought the Kentucky bourbon caramel would be a great complement to their sponsorship of various events across the country. So our story, in being true to who we were, the story didn't change. This is what we do. This is why we do it, led to sales with a global icon. So I'd say you can never go wrong with just sticking to who you are.
Absolutely. It's just so helpful and to have that kind of North Star of who you are. I love that. Okay, Chad, what is one key piece of advice you would give to small business owners who are considering alternative funding for the first time to ensure they successfully reach their funding goal?
Yeah, I think it's kind of like what Dr. Penny is masterfully articulating throughout this whole webinar. It's people fall in love with the story, right? Like at the end of the day, that's what people love because And I think even John touched on it a little earlier. Like, well, no, that was you, Dr. Finney. Well, it's saying like they're betting on the jockey, like they're betting on you, right? Like, so telling that story and being able to connect that story to your product and your experience is really advantageous, right? So I think when you're looking at that story and how to articulate it, just having a real vision that makes sense and that is something that other folks could tap into. You know, my mom, she's a pastor and she watches this show. I think it's called like Touched by an Angel or something like that. It's super old school. So if you're like under 30, you're probably gonna like, Chad, what are you talking about? But every time she watches the show, she cried, right? Every episode. I'm like, Mom, why are you crying? Right? She's like, this episode was just so touching. It was the story that captivated her, right? And I think even looking in the chat, like I think the more Dr. Penny tells her story, the more people are like, wow, like I'm rooting for her. I want her to do well. Like I want to like provide resources to her, right? And I think take that as a prime example of like replicating that for your own business. Like figure out what that story is. Like why it's your why. Why are you doing this? And why you think you're great at it and like why you think what you're providing is like really valuable. I think if you can do that, the more times that you communicate that story, the more times you share that story, it becomes really refined. And now you can start to identify like what elements that are really captivating. So you could see, okay, well, John like raises his eyes when I start to talk about caramel popcorn, right? Or I see Dr. Penny raise her eyes when I start to talk about, you know, finance and how I went from partnering with nobody to partnering like with big conglomerate. It's really that element where people see, okay, well, I want to be a part of that person's story. And I think the most successful entrepreneurs that I've found who have raised capital, who've like really done well, they've almost been able to develop like a cult type following and support that people just want to root for them and people just want them to win. And I think it's because they feel somehow attached to that particular story and they want to amplify that entrepreneur so that story can even resonate with other individuals.
I love that so much. It just, yeah, like you said, Chad, it really emphasizes kind of what we're hearing is that, you know, knowing your story, being able to articulate it, and also knowing your numbers. Like those are the two themes. You know your story, you know your numbers. Okay, John, how can digital payment platforms help small businesses build credibility with lenders or investors, especially when they're seeking additional funding?
Yeah, that's a great question and great point. So, you know, digital payment platforms allow you to accept payments quickly, which in turn obviously helps you produce revenue and a financial history that you need to become eligible for some of the lending products. In today's day and era, and we'll take PayPal for example, you can sign up and send an invoice, a payment link, or a P2P or a B2P in this case, transaction in a matter of seconds to make your sale. So, you know, no longer you're forced to wait for a paper check in the mail or have to worry about managing and depositing the cash into your bank account, you know, because this is on a, you know, an instant basis and done digitally. So it's, you know, it's very simple. And of course, it's a worldwide, you know, the payment platforms are worldwide. So it doesn't matter where your customers are, it's able to process those payments. Additionally, you know, many of those known payment platforms, they give to you your performance over time on nice crisp dashboards, so you get more insight to your cash flow, you know, how things are performing, and you know where maybe you have some opportunities. And so, you know, that obviously also the more you do on the digital platform, the more you can see how your business is performing. Then additionally, as it comes back to the lending side, you know, some of those digital platforms, such as PayPal, are able to utilize that information in making those funding decisions. So really, as you see those transactions, you know, many of those companies, including ourselves, are able to leverage that information to really understand how your business is performing and where we can help provide some capital to help your business succeed.
Yeah, absolutely. Having those numbers built in and being able to pull some of those reports is really key. I feel like I say numbers and storytelling a lot in this webinar, but those numbers are so key. And like you said, John, can make it easier for certain institutions to make decisions on funding. So
That's
it's
right.
a great way.
It's the speed and ease, Brittany, just to add on to that, right? It's that you're able to get that your sale in, you're also able to see that visibility for yourself. Spend less time having to worry about the accounting side, if you will, more time running your small business.
Oh, absolutely. Oh, so good. Okay, so before we jump into our Q&A, I want to ask each of you one final question. So if you could only pick one piece of advice, what piece of advice would you give to small business owners considering non-traditional funding options? Penny, I would love to start with you.
Okay, I had to come off mute. Uh, you know, I think it's really a replay of everything that we've just talked through. At the end of the day, you've got to sell a product or a service. So you've got to figure out a path forward to doing that. So I know a lot of folks, when they start businesses, it's like, okay, you're pre-revenue, totally understand it. But you've got to have a path forward because you've got to sell. At the end of the day, if you aren't on your way to profitability, then it's probably time to think about something different. And that's okay too. So I definitely say, everything else, knowing your story, knowing your numbers, but also figuring out how you're going to sell your product. That's what it's all about.
Yes, absolutely. Absolutely. Okay, Chad, same question for you. What is one piece of advice you would give to small business owners considering non-traditional funding?
I think it's just fail fast. I think people are so afraid of failing. And it's like, you know, there's really no wrong way. Most people learn from things being done incorrectly. So I think if anything, just lean into failing fast. I always equate, entrepreneurship, raising capital, all of this all makes sense and are harmonious with like dating, right? Like the more you date, you identify who you like, what you don't like, why you like that, why you don't like that. And then you start to now set some clear boundaries and you start to establish like, okay, well, I'm only gonna date people that meet this criteria, right? Or I'm not gonna date people that, have this type of like personality or energy. I think the only way you figure that out is like you have to put yourself out there, right? You have to actually figure out what the market is saying and responding to. So I think the biggest thing, I read books all day, and my wife is always like, hey, just like relax, dude. But I find a commonality of like successful people, and it sounds like so rudimentary, but it really is the truth. The most successful people, they just continue going. They don't give up. You don't hear about like Dr. Penny's just going to share some things about what she's done, maybe some bad things. You're not going to hear all the bad things that she's gone through, right? She probably doesn't have enough time to share that with you. You're going to see the successes. But like everybody who is successful, there's so many different challenges that they go through, frustrating moments that they probably wanted to quit, they wanted to give up, that they never just actually did. They never succumbed to that actual, failing or position. After a while, you just realize you tried 10 things, seven work, great, you discard three. You try another 10 things, right? Three things work, great. Now you have 10 things that actually work. You don't look at all the other things that you had to discard. I think that's really what it is, just really sticking to what your purpose is and your why, and like going through the bad, because at the end of the day, there's light there. And I think if you don't give up, your vision won't give up on you.
Oh, love that. Fail fast. It makes sense. And John, same question for you. What's one piece of advice?
Yeah, I mean, Chad and Penny hit on some great ones. So I'll just I'll add on kind of the back book side, if you want to think of it that way, which is make sure you're carefully choosing
Oh,
basically, right? Because some places it can be expensive to borrow money from, or have could have some unfavorable repayment terms. You really just need to think through not only what your business needs to grow and succeed, but also when you're looking to borrow, really just you need to make sure that your goals are aligned with your future lending partner.
Absolutely. Wonderful. Thank you so much, John. Okay, and Penny and Chad for answering all of those questions. And we have a few minutes we can get to a couple. So Chad, I'm gonna kick this one to you. Do you have a list or some top line suggestions for alternative funding sources that is available to startups, especially? Are there options for startup businesses who might be even in the pre-revenue stage?
Yeah, so I think you can look at your local like CDFIs, right? Those community development financial institutions. Again, they're incentivized to lend. I think more importantly, a lot of folks always advise them bootstrapping is it's not fun, but it allows you to really get a better understanding of like your business model and like how you could be advantageous to like an actual investor. So like when you go into a financial institution, like I always talk to my clients and say, hey, you got to go to them and saying, hey, if I'm talking to John, I got a business opportunity. I'm not coming to you looking for, capital. Like I'm going to tell you like almost like we have a business opportunity. So I think for non-traditional ones, it's, talk to your friends, talk to your family, like figure out what you're doing and see like what they can bring in terms of value, and then like compound that and start to look at other potential opportunities from there. There's like crowdfunding platforms. Again, if you tell a story, maybe like meet with Dr. Penny, figure out how you can tell your story, and then you can put it on like a crowdfunding platform, and other people will buy into it. And now you're getting the capital you need, and you're raising capital simultaneously. So you're developing a lot of good skill sets as an entrepreneur. I think you just got to be hungry and you got to be creative. Really, that's really what it comes down to at the end of the day. Brittany, I have to hop because I got to get on this flight, but it was really great.
You.
It was really great with speaking to you all, and glad I was able to share this panel with Dr. Penny and John. I'm going to put my email in here, so if anybody has any questions, you can always reach out. But it was a pleasure.
Yes, thank you so much, Chad, and good luck on your flight. We will see you in the next one.
Yes. Happy holidays, everyone.
Happy holidays. Bye, Chad. So if you guys really enjoyed, chatting with Chad, I do want to note that he is actually one of our business coaches. So if you would like to get a deeper dive into your specific business, this is a great opportunity to schedule, especially maybe an access to capital coaching session. So I'm going to drop that again because it is so valuable. Okay, Penny. So we've gotten some questions about like creating a crowdfunding campaign, because this is seeming to be an option that people want to go to, and especially about how to create the content to kind of engage folks. And just with your history of your storytelling, I wanted to ask you, what do you think about how do you create like really great content for crowdfunding type campaigns?
Yes, love it. And I'll say that we've actually never participated in a crowdfunding campaign. We probably should definitely do that. But just in terms of like how we tell our story, and that story leads to being embedded in those grants, those pitches, all of those kinds of things. I would definitely say for sure, get good, solid coaching on pitching, elevator pitches. You need a 10-second, a 60-second, and then like a 3 to 5 minute one. Get some really good, and you have to be able to do it without visuals as well. Just think about if you can do it without a visual and it's powerful, think about how more powerful it will be when you are afforded a stage with a visual. So I definitely encourage you to get coaching on how to do that. The other thing that I think people appreciate is that one of the great quotes that I heard my first day of graduate school is that the mark of true intelligence is to make the complex simple. So a lot of folks spend a lot of time trying to make concepts, whether they're complex or not, seem deep. No, for me, I want you to walk away feeling like you just left, the best kindergarten teacher ever, and you understood everything that was said, and you feel like you can do it too. That's what I always try to hope to convey is the simplicity and authenticity. You can't go wrong with those things. You have to be able to tell your story, but tell it in a way that is simplified, that even a child could understand it, but it's authentic enough that even a person who's been through the roughest journeys in life will feel it from that heart perspective.
I love that because it's kind of like the two sides of the things that you can include. And I think your points are great from pitching to crowdfunding to whatever you're trying to share your story is keeping it simple and keeping it impactful is so key. All right, we are probably less than a minute from the top of the hour, so I'm going to go ahead and wrap up our last webinar of 2024. Thank you so much, Dr. Penny Mickey. Thank you so much, John Bay from PayPal. Thank you to Chad, who is hopefully safely on his flight. And we hope you all have a little bit more information or at least a next resource for you to go to. Please don't forget about all of the resources we offer you for free. And we will see you all next year. Bye, everyone.